Hello, everyone, and welcome to the Altos Trading Live Strategy Session with Jeff Tompkins. This is your host, Richard Van Rich, and we have Craig Ward with us here also in the chat. This is a very special session tonight. Really glad you guys are here. Pretty action-packed week in the market, and you are all in the right place. So, this is your first time on. You'll notice your microphones are muted. That's so we can hear Jeff and I talk. But there is a Q&A box and chat box located at the bottom of your screen. If you move your cursor around, you can put questions there, and we'll get to those throughout the session and before we sign off at the end. If you have to hop off for any reason, don't worry. This is recorded and be available in the members area later tonight. So if you're watching us anywhere all over the world, again, this is recorded. Before I bring on Jeff, let me just read the disclaimer. Altos Trading LLC and Trade Translation software is intended to be used as an information service for subscribers and includes opinions as of buying, selling, and holding various stocks and other securities. However, the publishers of Altos Trading Trade Translation software are not brokers or investment advisors and do not provide investment advice or recommendations to any particular subscriber of any view the particular circumstances of any particular person. Altos Trading LLC, including its owners, do not accept responsibility for any decisions made by subscribers using the software, and subscribers to the Trade Translation software or any of the persons who buy, sell, or hold securities should do so with caution and consult with a broker or investment advisor before doing so. All right, with that being said, let me bring on Jeff. Jeff, you there?
I'm here. Greetings and salutations. Welcome,
Hey.
welcome. Big week in the markets. Great to have you guys all here. Got some special stuff tonight. Hey, EJ. Hey, Mike. Great to see you guys. Yeah, great week to be here. Obviously, a lot going on. We're wrapping up the month of July. We'll follow our typical format tonight, but we have something special to announce as well. So we'll start out with our market overview, map out our key levels on the major indices, review the 36-month moving average on the S&P, and we've got a very special guest tonight. AJ Brown is joining us for tonight's session and is going to be sharing some really great information on premium selling and some of the things that he's looking at. I think he's actually even going to take a look at a potential trade that he's got his eye on. So we'll be bringing him on shortly after we wrap up our market overview. We probably will not have time tonight for ticker roundtable, but possible. We'll just kind of see how things go, play it by ear. So keep those ready in case we do have time. As always, we'll wrap up with Q&A. So let's get over to our charts. Actually, before we do that, I'll talk a little bit about our watch list and what's going on in the markets, and then we'll get into the index charts. So we still have a lot of sector rotation taking place. The Dow and the Russell have had a strong month, and a lot of that is due to the rotation out of big tech, the mega cap stocks, into more the small cap and cyclical stocks. So that's largely what we're seeing this month. And then, of course, we have the Fed wrapping up their meeting tomorrow. So that's on the docket. It's going to be closely watched. There's and we'll also take a look at the Fed Watch tool, but there's virtually no expectation that the Fed will reduce rates at their meeting tomorrow. So the target rate will remain steady between 5.25% and 5.5%. But what market participants will be focusing on is Powell's statements. The sentiment that he portrays, which is going to be a little tough because obviously the Fed is very hesitant to exert any overconfidence in future rate cuts. So we'll look at the Fed Watch tool here momentarily, but Powell is going to be holding a subsequent press conference after the Fed wraps up its policy meeting tomorrow. So that will also be closely watched. So we're also in the thick of earnings. We have a lot of mega cap earnings on the docket this week as well. So lots of stuff going on. Markets today rotated lower for a number of reasons, largely Microsoft. So Microsoft dropped over 6% today. Due to a disappointing outlook for its cloud business. So there's just still a lot of, I think, fear and uncertainty in markets, and that'll become more clear as we get into the charts. But before we do that, just real quickly, I did add a couple new tickers to this week's watch list. So HOG, Harley Davidson, is in the watch list for this week. That stock had a buy signal yesterday, so the pending buy signal came in July 29th. Triggered today, so we're off to the races on Harley Davidson. Stock was up over 1.5% today. Second one was Children's Place PLCE. Also triggered buy signal, but then pulled back a little bit later in the trading session. But I think still a great buy signal going into the rest of the week. And then we have EOG, which was from a prior week. We still have a short signal in EOG in place. That one came in 6 days ago. So some nice signals in the watch list there for you guys who are Zillion users. Just looking at sector performance real quick. Real estate, utilities, materials are our top performing sectors. Tech, energy, and communications are underperformers on the close today. So let's quickly get over to our S&P charts. Looking at a daily chart of the S&P 500, where we also still have an open sell signal. This one came in back on July 17th. We've talked about this in previous weeks. Triggered on the next trading session, the 18th. Currently, the trailing stop algorithm is right below 5,500, right? Just actually above 54.95. And we got a nice rotation lower there again today. So nice signal. But let's take a look at some critical levels to keep an eye on going into tomorrow's session. So we encountered this support level right around 5,400 in last week's trade. So I'm keeping a close eye on this. We nearly touched it. I mean, by one, we were off by 1.7 points on today's session. Our low on the SPX was 54.0170. So we nearly came down and touched it. And you can see we just slightly breached it on July 25th session, and then rotated higher from there. So this is a critical level of support to keep an eye on going into tomorrow, because if we break this level to the downside, and specifically I'd really keep an eye on July 25th lows. If we start rotating below the lows from July 25th, this sell-off could really gain some steam to the downside, in which case I would keep a close eye right around that 53.50 half century mark. Is our second level of support here. We'll just call this support 2, support 1. And below that, 5,300. The 5,300 century mark, I would also keep an eye on. Potentially could encounter that this week if the sell-off accelerates to the downside. So got a few critical levels of lower support to watch on the S&P. As far as resistance, this 5,500 level is now a very strong level of resistance. And you can see back in, we talked about this in previous weeks, but back in mid-June, mid to late June, we encountered a lot of resistance there. Broke it on this recent leg lower last week, and then have since been retesting up near this level over the last 5 trading sessions. So this is a critical resistance around 5,500, and if this level breaks to the upside, then I think that we could see a pretty significant leg higher, but doubtful that we'll retest recent all-time highs from earlier in July by the end of the week. So we'll revisit resistance levels going into next week when we meet again on Tuesday. But those are the critical levels to watch on the S&P. So let's hop over to the NASDAQ 100, take a look at the Qs. Of course, tech is taking a pretty heavy hit. Recently had a sell signal on tech up near the top on the Qs as well, back on July 12th. We have some significant volatility expansion here with the outer Bollinger Bands diverging while the price candles breach the lower band. Okay, so we're in volatility expansion to the downside here. Looking at the levels on the Qs, let's take a look at a critical level of support, which resides right around 450. Okay, and we haven't come down there yet. Of course, we're getting close. But if you look at prior resistance here from back in February and March and into April, and then broken in late April, early May, and retested around the mid-May. Okay, this is a very critical level of support on the Qs, right around 450, and one you want to keep an eye on as tech sells off. May find some support there, and good likelihood we can encounter this level before the end of the week. And if that breaks to the downside, there's not a whole lot of strong support in close proximity below this 450 level. So things could really accelerate there if that's broken. Another important reason to keep an eye on 450. Now, as far as resistance, 470 is a level of resistance that I'm watching. So if we do get a rotation higher this week off of strong quarterly earnings or positive Fed reaction, this 470 level is one I would watch. This is right where the volatility expansion initiated. Also, you can see we have some gap resistance here from back in early June. Now I'm going to make this more of a resistance zone because right around 475, we have some prior support, which now serves as resistance as well. So this is also a resistance. So this 470 to 475 zone, I think, is going to be a critical one to watch. But right now, the momentum's to the downside. So until we reach a critical level of support like 450 and see some, some price reversal, rotation higher off that level, it's going to be less likely that we encounter this resistance zone. But those are the levels to watch on the Qs going into tomorrow's session. We'll take a quick look at the IWM, which, of course, as we talked about in previous weeks, broke out of its trading range. So it broke through the top of its channel here around the 210 level. It's taken off, and it's remained above. It stalled out, the last couple of weeks, getting some chop sideways price action here on IWM, but has remained elevated outside of this prior resistance level, which now serves as support. And that just signifies what I mentioned earlier, that we're getting sector rotation out of some of the mega cap stocks, out of tech into small cap stocks. And the reason behind that is that there's the expectation of 3 rate cuts by the end of 2024, which would be beneficial to small cap stocks. And that's largely why we're seeing IWM take off to the upside and maintain these higher price levels above critical support. So what I would watch on IWM as far as resistance is the 225 level. You can see that's in this recent sideways price action where we've seen intraday rejection right around this 225 level. So that's a level of resistance. If IWM breaks out of this range to the upside, this recent leg higher could resume and really accelerate. We would then be watching, the big round numbers, century marks like 230, 235, since we don't have any prior prints up at those levels. Okay, so let's take a look at talk a little about volatility. Go over to the VIX. So we saw, so VIX is remaining. It's still at relatively low, low levels historically speaking, but relatively high based on recent VIX levels. So we've obviously spent a lot of time down between this like 12 to 14 zone on the VIX. And now we've spiked up. Okay, and we did, by the way, have uh, a VIX buy signal back here earlier in July prior to this spike. But the key thing to note here on the VIX is that we are remaining above this level of prior resistance that we had talked about. Let me draw that a little bit better here. Right around 15. Okay, so for most of 2024, when we have gotten any VIX spikes, and we've had a few above the 15 level, most of these have been right in to or around this 15 level, and the VIX has retreated back down, and the uptrend has resumed in the major indices. That's not happening so readily in this recent leg lower. It's looking more like back in April. Okay. So what I would keep an eye on here on the VIX. So of course we watch the 20 level. It's kind of the line in the sand. If we see VIX closing prints above 20 at any point moving forward, that's going to be a pretty strong indicator of more of a sustained market sell-off. And that might be where we'd be looking more like a 10 to even 15% plus correction. But we're still in this 15 to 20 zone. So VIX today closed 1769, up a little over 6.5%. But it did have a positive close. And it looks like we're also in a little bit of sideways chop here, but it looks like we're maintaining these relatively higher VIX prints going into the rest of the earnings season and the Fed announcement. So to get a better idea behind the VIX readings, we'll go over to the VVIX, the volatility of the VIX index, which can often give us a little more clarity or better forward-looking indicator of whether volatility is really going to be sustainable or is going to be more short-lived. So right around this 95 level, kind of like we looked at on the VIX itself, we see prior spikes in 2024 retreating from this level. We just again had that brief period back in early mid-April where we got pretty well above that. We're just under 100 on the VVIX today. When we start getting prints above 100 and specifically 110, which is right about where we spiked up last week on the VVIX, then that again is going to signify likely a more sustained high VIX prints and more sustained rotation lower in markets. So I'd keep an eye on that. And then specifically just kind of keep an eye on the VVIX highs from today and last week. And if we break those are going to be right around 102. We start breaking those to the upside, then we'll likely rotate lower into those support levels we just looked at on the indices. Lastly, real quick, a look at the skew index. This will be interesting to look at going into tomorrow's wrap up of the Fed meeting. Interestingly, and this does surprise me a bit, we're getting lower skew prints. For those of you who aren't familiar, skew measures the out of the money volatility skew on the S&P options, and a higher skew reading indicates more implied volatility at lower strike prices on the S&P, which in turn indicates that major market participants are either hedging or speculating or forecasting a significant downside risk in markets. And we'll typically see skew increase going into uncertain binary events like a FOMC meeting or some major market catalyst. However, and this could just be a function of futures markets have already priced in no rate cut announcement tomorrow, so that's probably what's going to happen. But there's still a lot around what the interpretation of Powell's comments could be tomorrow that could rattle markets. Not to mention, the remaining quarterly earnings on the docket. So with that said, skew is down fairly significantly. Just recent weeks, we were getting prints well above 150, 155. I even had one up above 162. And today's skew print was just a tad over 127. So we're down at low skew levels. But sometimes that can be looked at as a contrarian kind of metric, meaning that there's complacency or people are unprepared for a market sell-off when skew gets low. And I kind of prefer to look at it that way. So it looks as though there's not a lot of vol skew on S&P put options, but this could definitely pick up going into the rest of the week. So keep an eye on this. If you start to see skew moving up, because we're down at these prior support levels around 127, 128, if you see that start to pick up, that could also signal more market instability and potential sell-off on that. Let's also quickly look at our monthly chart of the S&P as we're wrapping up the end of July. We just got one trading session left tomorrow. Looking at the monthly candles of the S&P with the 36-period moving average. Again, something we've covered extensively in our weekly sessions. Still an open buy signal back from December on the SPX monthly time frame. Now, this is July's candle. Zoom in here. Right. So unless something major changes tomorrow, it's looking like we're going to have a bearish close on the SPX to wrap up July. And we're far off the July highs. And we're far away from the 36-period mean. So this is, to me, it's indicating when you look at also seasonality, market seasonality, and other factors, and one major one being Fed fund futures have largely priced in this 25 basis point reduction by the end of the year. That could not happen and very much rattle markets. It could happen and markets could still rotate lower. The adage, buy the rumors, sell the news. The rumor's been bought. Eventually, even if it plays out that way, could result in selling behavior. So we may see some mean reversion here going into the second, as we're progressing through the second half of the year. In the July candle so far, again, we have one more day to complete it, is indicating a potential reversal in rotation lower or mean reversion on this. And we've talked also, quite a bit about this 4,800 level. So, a 10% correction from current levels, today's closing levels would put us a little bit below 5,000, not quite to 4,800. But I still maintain this 4,800 level, I think is probably more of likely a medium term pullback level that I'm watching, and one where, of course, we'll revisit this in coming weeks. But if we do get down there, I think based on the price action that occurs if we get there, in other words, if we get some bullish reversal off this level, could be a great buying opportunity at better price levels. I think markets are just too overpriced at the moment to buy in at these levels, being that we're so far off the 36-period mean on the monthly time frame. Okay, so lastly, we'll take a quick look at the FedWatch tool, just kind of see what's going on with the CME FedWatch tool. So again, we're at 525 to 550 as our current target rate. As you can see, there's virtually no chance of a rate reduction tomorrow. All right, and that's remained fairly steady, even gone up a little bit. Now, when we go out to September's meeting, all right, there's currently, and this has changed quite a bit over the past month, there's a 86.3% chance of a quarter point reduction. And if you look, this is down here, the target rate, 500 to 525. If you look at the past 1 month, 1 week, 1 day changes, a month ago, markets were only pricing in about a 58% chance of a 25 basis point reduction. Okay, that's jumped significantly, currently again up at 86.3% today. All right. So there's a lot of conviction, strong expectation around these rate reductions. Then going into the November meeting, we've got a much higher probability now of being down 50 basis points from where we are now. That would put us in the 475 to 500. And if you look at this, that's more than doubled from a month ago, which back on June 28th was just under 25% and is now up over 57% probability. And then going out to December, down another 25 basis points. And that would put us in the 450 to 475. A month ago, that was down around 18.5%. And as of today, is at over 55%. So you can see these expectations of rate reductions for the year have increased dramatically over the past month. And to sum it all up, Fed fund futures are pricing in 3 25 basis point reductions by the end of the year. All right, so this is also critical to keep an eye on going into the rest of this year, because if any of this changes, it's going to rattle markets. Right now, it's changing in favor of those 3 25 basis point reductions, and we're still getting a market sell off. So that's the buy the rumor, sell the news that I was talking about. But if that changes to end up only being 2 rate cuts or 1 rate cut by the end of the year, then that's going to rattle markets significantly. So that's why we want to keep a close eye on that. All right, so I'm going to go ahead and pause there and check with Craig and Richard to see if there are any questions that have come in. I'll answer those. And then once we have all the questions addressed, I'm going to introduce our special guest for tonight. So Richard, anything we can answer?
Yeah, Chris asked, with the S&P looking kind of sketchy right now, would you still consider trade trend long signals, or do you wait till the S&P starts showing more bullish behavior?
Yeah, so right now I am positioned more bearish. So when let me get back over to the chart here, the right one up. There we go. So when this so this is off the daily chart, but when this recent sell signal came in July 17th, and again, this is still open, entry 55.77. I try to trade with, the broader signal. We do, of course, have a buy signal on the monthly. So some of these previous buy signals I think were good in the context of the longer time frame monthly buy signal. But looking at, as we just did, at the monthly time frame and the bearish candle forming for July, in this recent sell signal, I'm more positioned with bearish signals now. So I'm not really taking any buy signals, directional buy signals at the moment. I'm more weighted to bearish sell signals. And just to add to that real quick, I think a lot of that will be dependent on whether some of these support levels hold. But it's looking more likely like we're going to have a leg lower here going into August.
Okay, that's all I got.
Only one. All right. Well, that's good for AJ, because I'm going to now bring on our special guest, AJ Brown, and introduce AJ. AJ's a good friend. I've actually appeared on AJ's podcast in the past, and really enjoyed talking with him about options. He's an expert specifically in premium selling. So he's going to be talking to you guys tonight about some option premium selling strategies, and even looking at some potential opportunities. So with that, AJ, I'll go ahead and hand it over to you, and you can take control of the screen and the mic.
Awesome. Hey, everybody, this is AJ Brown. And Jeff, I just let me share my screen here. I'll wait until I think you have to give me some control here. But guys, I love talking with Jeff. Let me tell you why. we come to the same conclusion, but we also sometimes use different tools. And I was gonna, I am gonna talk a little bit about strategies in my premium selling, but I can't help but here, let me I can't even maybe I can request to share my video. Let's see. Boop, 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 boop. That's not important, but
I don't know if that's something we have to enable. Richard, I know AJ wanted to go on camera there. Do we have that enabled for him?
Let me
if
see.
not, that's okay. I'm having a great hair day, and I just wanted to show it off to everybody.
Yeah.
Jeff and
But
I are
any,
both jealous of that.
Yeah, exactly.
You
But
have
the
good
good
hair
news is
day,
I
Jack.
can't have a bad hair day because I don't have hair. So
I love it.
what was that, Richard? The video, do we have the video
Uh,
enable?
No worries.
all right.
No worries.
Jeff, since you're the host, you might have to go into the dots for the settings and do it there.
Okay, AJ, while you're going, I'll work on that for you.
Yeah, no worries. I think you guys are seeing my screen. So I wanted to kind of jump on the whole bandwagon and kind of talk to you the way that I talk to my program participants about the broad market as well, because it's so awesome, the things that Jeff said, because it's what I agree with. He's talking about the sector rotation, and one of the things, so I love the S&P 500, right? When I think about the broad market, I think about the Dow Jones Industrial Average as like the king and the queen, whereas the S&P 500 is the prime minister, right? In other words, it's the one that actually gets the work done. It's the one that represents my watch list, and I'll talk to you about my watch list in a couple seconds here. But so I look at the S&P 500 a lot to get an idea what the broad market is. These days, I started back in 1997. I can't believe that I've been doing this for 27 years. And in fact, in 2005, about 19 years ago, I became a full-time trader. I decided to leave my day job at Hewlett Packard and just do this, and I've been doing it ever since. And this is, how I support my family, how I support myself. And the scoop is that when I look at the S&P 500, that most represents my watch list of the boring stocks that I like to sell premium on. And you're looking at my chart here with the S&P 500. In fact, I like to compare it as well to the S&P 500 equal weighting index, right? So the difference between SPX EW and SPX, of course, and you probably already know this. I'm probably speaking but I'll tell you, for those folks that, those few folks that don't know the difference. This is the same 500 stocks, but they each have an equal weight, versus in the S&P 500, they're ordered or weighted, and I don't mean WAIT, I mean WEIGHT, by their cap, right? And so what's nice about looking at it when they're each given the same component within the index is that you kind of see that while the S&P 500 was shooting higher, since the beginning of May, the equal weighting has been going sideways, which basically means like 3 or 4 symbols were shooting the whole S&P 500 higher, just like Jeff said, the mega caps, and the rest of them were kind of just going sideways. And finally, it kind of hit a point. You got basically your Apples, your Nvidias, and your Microsofts leading those magnificent 7, and people were like, "Hey, you know what? They're all telling us that the AI stuff is going to take longer and be more expensive than we wanted." And so you started to see this sector rotation where a whole bunch of the other S&P 500 components started to take some money away. And you also look back at the S&P, and I like to compare reversal to reversal moves. So what that means is if you take a look here, I've identified the reversal to reversals, right? And I like to compare each reversal move to the previous move. It's called retracement analysis. No big deal. It comes to the same conclusion as what Jeff was saying, but I just thought I'd give you a different component here. So let me just, I'm all over the place here. I just got really excited listening to Jeff's analysis, because mine falls right in line, right? Same levels that he was talking about, right? So this last move that well, let me even go back to this move right here, right? When we look at this move right here, one of the things that I noticed is that this move right here didn't quite pull back as far as it should, right? And that means that the distribution didn't happen. And so a lot of those investors that typically are moving the markets, right? You got your hedge funds, you got your mutual fund, you got your pension fund. Those are the kind of guys that I look to ride on their coattails. They didn't get a chance. There wasn't enough distribution for them to actually like reload their guns. So the question really comes when you have kind of a rally like this, where the heck did all this money come from, right? I actually had a program participant about 15 years ago, no lie. He told me that he was taking money out of jars that he had buried in the backyard, right? So there are folks that are like, they have this like FOMO, right? They're like hearing about Nvidia and they're like, hey man, I'm gonna jump into this thing based on what my friend down the street is doing. I was hearing those names, Nvidia, Apple, Microsoft, from people that really had no business trading in the markets. They had no experience, but they were still throwing money at these symbols. So you start to think about the change in what the avatar is, who is actually putting that money in. I also, during this time period, watched as some of the crypto, right? You think about the folks that are constantly interested in crypto, right? These folks that are like chasing, in my opinion, vaporware, and all of a sudden money's flowing out of crypto and into these AI plays for like instant gratification. You're like, oh gosh, that type of money is quite more volatile, right, than the more traditional money. And when you don't have that pullback and you don't have those traditional investors, now all of a sudden you've got this rally, but you wonder what that money's coming from. And so the scoop is, right, you can see my levels here. Just like Jeff said, we're kind of threatening. I've got these colored zones here based on my retracement analysis. We're kind of threatening with going into this red zone that I've got, which for me means, hey, be prepared for 2024 and even into 2025, the rest of 2024, to be more about sideways choppy than about, continuing with the trend. And that's the same conclusion that Jeff was just talking about. But it's just so awesome that we look at things slightly different. We got some different tools, and yet we come to the same conclusion, and it's kind of neat. And hopefully with a couple of the ways that I was looking at the market and Jeff was looking at the market, you picked up some additional ideas to kind of corroborate and make, it's all about getting confidence around what you're seeing, right? And not trying to be a pioneer, right? Because I don't know about you, but even with my portfolio, I can't move the markets, right? And nor would I want to. What my whole goal is to make sure I'm observing what the heck is happening in the markets and figuring out ways to ride on the coattails of what's happening in the markets, right? And like I was saying, when I first started out in the mid to late 90s, correlation was a thing, right? Yahoo would report, and then 3 days later, Google would report. And based on what Yahoo did, you could kind of invest in and make a good call on trading Google the next 3 days ahead of their earnings and stuff like that. But now, with the proliferation of exchange traded funds and, a lot of people betting on sectors, betting on indexes versus individual companies, I mean, you got to pay attention to the broad market. One of the things that I've done this whole time, I favored in the beginning, because from 1997 to 2005, I decided I wanted to keep my day job, right? And so when I was looking at different sorts of investing and trading strategies, I decided to really take inventory of what I personally could do and maintain. And it wasn't going to be day trading, right? Because I was like a mid-level up to at the end there in 2005, I was doing some high-level management stuff at Hewlett Packard. And, I couldn't be there when a trade signal came to be able to jump in and jump out on a day trading basis. So that didn't work for me. What did work for me was being able to do end of day trading and being able to recognize what patterns the markets were throwing at us, like the build up to the dot-com boom, up to the dot-com bust, the whole, there was a whole gas thing going on between that time, and then real estate shot up, and then real estate dropped, and we had the Great Recession. We had like the recovery of the Great Recession. We had the first couple of years of the Trump tax cuts and the Trump maybe not influencing Jerome Powell and the Fed, and then all of a sudden COVID. All those things are all about recognizing what's happening in the markets, and especially what those big money traders that 10%, even 5% of the market is of the market traders control like 90 to 95%, paying attention to what they're doing, and then having an option tool chest, right? And you guys know about all the different ways, right? If you're only doing the underlying symbol, you've got a choice of either going long, or if you have a little bit of elegant, you have a margin account, you might be able to go short. That's two different strategies to trade directional moves. But when you start getting into the world of the derivatives, equity options, right? You make money when the market goes up, market goes down, market goes sideways. You make money as time passes by if you do theta decay trades. That's my favorite. You can make money on volatility, right? You can make money if there's confidence in the market. You can make money if there's fear in the market, right? Last time the mathematicians, I read a white paper, was with different combinations of options, and then also with the option selection, right? You know that an option that is near term at the money is going to behave totally different than one that's, out of the money in 3 to 6 months to expiration, versus one that's deep in the money that's 8 months or more to expiration. They're different creatures, right? So picking the option, the strike price and the expiration date and the type of option, that's going to have a different effect as well. So there's 27 different ways, according to, a white paper that I just recently read, to trade option strategy. So really what it is recognizing the pattern that you're seeing in front of your face, and then applying the correct option strategy to profit from it, right? And finding the best bet, right? So like in earnings plays where we really don't know if something's going to go up or down, maybe what you're going to trade, and this is something my program participants and I trade all the time, is the buildup of fear leading into earnings, and then immediately as earnings is released, that confidence that comes right back in, because that seems to be the reliable play. Is that seems leading up to many earnings, investors get anxious, and what happens there? The implied vols go through the roof, right? And so we can sell those implied vols 1 or 2 days before options expiration, or not options expiration, before the earnings announcement. And then usually right after earnings announcements, calm comes back, people start selling those options, the price drops, and that's when we buy to close, right? Being on the correct side of that equation is what it's all about. And that's what I like to do, right? But one of my favorite, my most reliable strategies that I like to pursue is premium selling. And we actually, Jeff's going to tell you about a webinar that we're going to do on Thursday night. And I'm going to go into more details. But one of the favorite things I like to do, and I'm going to go through my upstart trade here that my program participants and I have been doing since April. So let me give
AJ, you should be able to sorry to interrupt. You should be able to share your camera now if you'd like to.
Oh, you guys want to see my good hair?
Try. Hopefully it
Let's
works.
give it a try here.
There you go.
Hey, look at this.
All
Look
right.
at this hair.
I
Yeah.
can see why. I can see why you wanted to go on.
Yeah, right. Right. And I got the Trading Trainer logo t-shirt on. Anyway,
Beautiful.
what I was going to say here is that I was going to tell you, so I'm 51. I just turned 51 on May 20th. And I have a toddler. Yeah. Don't ask me what I was thinking. But with that said, even now more than ever, my trading style has to be that, because I spend the whole day with her. She is the end all to be all to my existence. And so when she goes to bed, I finally get to sit down in front of my trading computer at about 10 p.m. at night. And my goal is to look at all of my end of day signals. And then if there's an end of day signal I want to act on, if it's got validation, and this is where, by the way, I had Jeff come and speak to my crew. And that's because he's got those indicators you guys have, which are absolute gold, right? For identifying tops, bottoms, reversals, and they work perfectly in this. But you get an end of day signal, and then I just load up my contingent trades into my brokerage account for the next day. And then I'll come back 10 p.m. the next day, see how many of them filled. If they didn't fill, I'll evaluate whether I want to try again, carry it over, and set and forget, right? So that I have my days free. And that's my trading style. And so I don't know if that resonates with some of you, but I wanted to go over my upstart trade with you guys because I go for these boring. I was going to use a profanity, so I'm not going. My boring stocks that go sideways choppy, right? That don't see mainstream media, right? Typically, I like to see stocks that are they're doing well as a company, or they have potential. If they're giving dividends, I'd like another one that you might want to put that I've been watching is Alibaba, right? Alibaba really, they give their dividend every once in a while. And again, I always tell my program participants to think about the avatar. Who is it that's trading these things, right? And what I'm looking for is the person who totally wants to just take the dividends. They don't care if there's asset appreciation. They're okay with this thing going up and down. They're putting their money in there. They're forgetting about it. That's the things I love to trade, right? And I like to set up trades that will last for months, where I maybe once or twice a month I have to do an adjustment to the trade, but that way it minimizes the amount of time I have to do researching the underlying symbol, because I really like to understand the underlying symbol I'm trading, set up an initial covering position, and then I'll sell premium, maybe buy some protective options, roll out of the protective options, and just rotate that trade and try to milk it for as much as I can for as long as I can. So coming back to Upstart, that's the one I wanted to feature. I started to follow this one as soon as it had that falling window on earnings. It gapped. When was this? And back in February. But I don't like to start trading on these things until it basically establishes support and resistance, about 2 tests of support, 2 tests of resistance. Let me go ahead and turn off some of my conflicting indicators here. 1 second here. Let me just turn that off. That's an indicator I like to use in order to analyze the broad market. So these are my end of day signals for identifying tops and bottoms in a sideways choppy market, right? And so I waited for this channel to establish itself after it had fallen down. And I also started to look at and just follow my thought process here. Where was the more stable or consistent level? Was it support or was it resistance? Was it where the bottom reversals were occurring or the top reversals? And the reason why I want to know that is because I can structure these trades. I would rather, if I'm going to do a consistent adjustment every time there's a cycle between support and resistance, I'd rather do my adjustment at that set level of support or resistance. So I was noticing about a month into observing Upstart that it was the level of support that was giving me the more consistent level. The resistance was a little bit over there. So I decided that I wanted to, get into this trade for the long haul, and that it was going to be at bottom reversals that I would want to sell my premium, create kind of a instant dividend. And it's not a dividend, traditional dividend, but when I sell premium, I'm like, hey, I just got a paycheck today, right? And so in order to sell premium at the bottom of a channel, where's your initial covering position, right? It's got to be at the top of the channel. And you might say, hey, why do you leg in? Because if you leg into these positions, there's pros and cons to everything. But if you leg into these positions, you increase reward, you minimize risk, and you can wind up staying in these things longer than if you just place the whole trade all at once. So this was the signal, April 2nd. You can kind of see my log that I keep here. I had an April signal, April 2nd end of day signal, and I wound up getting that follow through from my bot, my conditional orders on April 4th, right? And that's where I shorted some shares of stock. I shorted 400 shares of stock at 25.73. So that was me getting in at the best price I could. And if you think about shorting a symbol, right? And you probably, again, I'm probably telling you something you already know. That's the perfect initial covering position for selling put options, right? Because when you short something, you borrow the stock from your broker and you short it, and you all of a sudden have a chunk of cash, which you can use to cover selling puts, right? Because a put is an obligation to buy somebody's stock. You have to have that cash waiting, right? And if somebody does exercise you, right, and they put their stock to you and you have to pay for it, that's the chit you have with your broker when you short a stock, is that you have to return the stock, right? So shorting a stock is a great way. That's an initial covering position for selling put options. So check it out. On April 23rd, that's this arrow right here, I believe. Nope, it's this one right here, this bottom signal. On April 23rd, I got an end of day signal. It took a few days before I actually got the follow through. It was April 26th, and my follow through came at 12:45 in the afternoon. And I did 2 transactions, and that's what I like to do. First, I sold my premium. I sold a put option. This was the May 17th put option. And then I bought a protective option. So I like to sell the near term at the money option. That's going to give me the biggest extrinsic value push. But then I like to protect myself, usually wherever my, close to my break even price. In this case, the 27.50 made sense. And I go 3 to 6 months out. So I bought a September call. Now, notice I'm buying this at the bottom. So if I'm buying this at the bottom of my channel, the call that I'm buying as a protection is going to be at bargain basement prices. And the put that I'm selling is going to be at the highest price it can. And because I've got a confirmed bottom, more than likely, I'm hedging my probability towards having this expire worthless. And that's exactly what happened if you take a look at this trade log. My premium expired worthless, and then a couple days later, I got my signal to sell that protective option. Now, I personally like it when I sell my protective option either at break even or at a slight profit. In this case, it didn't work out. And I'm just showing you a real life trade. I wound up spending 45 cents on that protective option, which ate into my premium by, $2.65 minus 45 cents. So I really only walked away that cycle with $2.20 of premium. I did it again. I got my next signal June 5th, where I sold premium. I bought protection. June 14th, I got a signal, and these are all those signals that you can see here. June 14th, I got my signal, and this was before expiration, right? The option that month, and I like to do monthly options, but some of my program participants do weekly options, was expiring on June 21st, but I got my technical signal a week early. So instead of waiting till expiration, I unwound both of those trades, only to do it again a few days later where I got my next signal, right? I sold premium. I bought protection. And this time around, July 19th, my premium expired worthless. July 22nd, I wound up getting the signal to unwind my protection. And now I'm waiting for the next opportunity to do it again. I'm waiting for the next signal. You can see where we are right here. This was the signal to get rid of my protective option. I got my follow through the next day. and now I'm waiting for the next bottom. And those are the type of trades. So if we go back and look, take inventory of what the heck I did, I set up my initial covering position on April 1st. I did some trades on April 26th, 22 days later, right? I didn't do anything on May 17th. That happened automatically. Sometimes I close the position if there's any chance that it might go one way or the other. In this case, it was clearly not going to get exercised, so I just let it do what it's going to do. That way you don't pay any commission. You don't pay any premium to close down the position. It just expires worthless, right? May 22nd, about a month after, I rolled out of my position. June 5th, 2 trade. In other words, I'm not doing crazy day trading stuff. I may be trading once every 2 weeks per position, once every 3 weeks. It's how I like to trade. It's how I'll be talking on Thursday. I'll be giving you the nitty-gritty of how we plan out these trades. But I wanted to feature this one on Upstart because my program participants and I are just killing it on Upstart. And yeah, that's the one I wanted to feature for you guys. We'll talk about more of it if you register for that webinar. Did we put that perhaps in the chat?
Yeah, we'll put that in the chat for you. So guys, we're going to be inviting AJ back Thursday, just 2 days. Yeah, and we're gonna host a dedicated webinar just for AJ. He's going to be digging into a lot of what he's covering tonight's session. He only had about 30 minutes tonight, so he's going to spend a full hour going into more of the details on how he trades around options and whatnot, like he just did with Upstart. So we'll put the link. In fact, Richard's already done that. He's put that in the chat for you guys. So if it's a free to attend webinar. There's no cost or obligation. You can just attend and learn a lot more from AJ. But you do need to register. We have a limited seat set up on Zoom. So that link's in there for you guys to go ahead and register. Secure your spot for Thursday. That'll be at 7 p.m. Eastern this Thursday.
I'm stoked. I'm stoked to talk to you guys more. And I'll definitely answer more questions on Thursday. I know that I kind of was long-winded, especially because I had to compare my broad market analysis to Jeff's. So I don't want to take up any more time of the podcast here, but you know what? That was awesome. Thank you for giving me that time to talk to folks. I can't wait to talk to you guys more closely on Thursday.
Yeah, no, that was great. Thanks, AJ, for sharing. We've got a lot of good comments. Great to have you here. Really appreciate it. Looking forward to seeing you again on Thursday. So guys, yeah, again, that link is in the chat for you guys to register. AJ, thanks again. Hope you have a great rest of the evening. Thanks for sharing some of your knowledge and looking forward to
look at that picture. I look so different than I do in real life. I've got the beard now and you can see my gray. And then you look at that picture and I'm like a handsome dude up against the brick wall. Anyway, yeah, thank you for having me, Jeff. I always love having you guys at my, to talk to my folks. Your indicators are to die for. You guys know, the different views of options. And it's just so cool that I don't have anything different to say than Jeff. It's just, some additional ways to look at the same thing in a different way and it's awesome. So thank you.
Yeah, of course. No, thank you, AJ. Yeah, it is remarkable how a lot of our analysis lines up. We just get there.
That's why I love chatting with you, man.
Yeah, exactly. All right, AJ, thanks so much. Once again, thank you. And we'll see you Thursday. All right, guys. So with that, we'll go ahead and wrap up with any final Q&A. If you guys have any final questions, I know there's a lot going on this week in the markets. If there's anything that you want me to wrap up or cover, let me know in the chat of the Q&A. Richard, anything come through? Or are we good to go?
Yeah, we're good to go.
All right. Well, thank you guys. I appreciate it. Hope you guys can attend our special webinar Thursday at 7 Eastern. With AJ. He's a wealth of knowledge, lots to learn from him. So looking forward to having you guys back on Thursday. With that, hope you guys have a great rest of the trading week. And we'll see you, if not Thursday, back same time, same place next Tuesday, 7 Eastern. Take care.